For you, what has been the dominant theme here?
The dominant theme here has been capital outflows in Asia and Latin America and the trade war. Those are the issues.
Indeed. And are you seeing that in Colombia?
No, not so far. We don't trade too much compared to Asia. And capital outflows have not been there. In fact, we have been having capital inflows in the last month.
So, tell me, why have this huge central bank FX repurchase plan that you have?
We are repurchasing foreign reserves because we have this line with the IMF, which is going to disappear in 2 years. So we are buying reserves. It's very strange these days to buy reserves.
It is,
but the exchange rate has been very calm. We're having capital inflows, so we started to buy international reserves.
So that gives you a buffer, of course, doesn't it?
We want to increase the buffer because we are going to have rough times in the world next 2 years, I'm afraid.
Okay, well, tell us about those rough times and how they're going to affect you, because you've not been affected thus far.
Yeah, well, first of all, we have the increase in interest rates in the States, so portfolio capital maybe will move much more to the States. Second, we have oil price volatility, of course. And on top of that, we are going to have this trade war. We are having this trade war, so volatility is everywhere.
Okay, so this repurchase plan, how do you conduct it? What are the basics, the mechanism?
No, it's designed to buy reserves cheaply. So if the exchange rate moves upwards, the valuation, we don't buy reserves. So we have options. And only if the exchange rate is...
put options.
Yeah. So only if the exchange rate is falling, we buy reserves.
Okay, wait, tell me something here. You know, what does it ultimately lead to here? What sort of is the limit you're going to?
No, we don't have... It depends a lot of the private sector and how the exchange rate moves. If it moves upwards, we don't buy reserves. So this is a mechanism to buy reserves 2 years. Because in 2 years we will have to talk again with the IMF for this credit line. So we're calm and we will buy reserves there cheap.
Okay, but tell me, I mean, is your market liquid enough for these auctions? That's the thing.
Yeah, it's working. And we have been doing that in the past too. 4 years ago we bought international reserves through that mechanism. In fact, Colombia has been trying almost every way to buy reserves. Previously, some years, we bought the same amount of reserves every day. But because the idea today is not to move the exchange rate, just to accumulate this buffer, we are doing that way.
But let's get to the Colombia story. 10 years ago, this country was a basket case, some said.
Yeah.
And look at it now. Tell us what happened.
Well, first of all, violence have decreased drastically.
There's a reason for that, though.
Which is very difficult to do. When you look at crime rates and all that, they have been decreasing very fast.
In fact, Bloomberg used to have a hostage-taking index on a monthly basis, and we stopped doing it, I think, about 8 years ago.
Yeah. So that's the first thing. Second thing, our macro management, I think, is good. We have one of these happy floaters, you say. And we have been following this inflation targeting very strictly. Third, we have large shocks in the past, but we are accommodating to those. So inflation is 3% now, country is going to grow 3.5 next year, which more or less the potential. The situation of the banks is okay, and we float. So far, things have been moving well.
But the neighborhood is not looking good at the moment, particularly with Venezuela, and you have so many people who have come in. They could actually change the game. This is the thing.
Yeah. The neighborhood is not very good, but so far markets have been discriminating. And when you look what's going on in the region, in the world, in fact, you look that they are tough with Argentina, with Venezuela, with Brazil, not yet with Colombia, Peru, and Chile in the region.
Yes, but the Venezuelan problem, it could become systemic, could it not?
Yes, the Venezuela, the Argentina. So volatility is all over the place. But again, so far markets have been discriminating good and bad case.
Okay, my final question is, you're confident looking ahead next year, but for you, what is going to be the biggest risk to the global economy?
The biggest risk to the global economy, of course, is a trade war. But for Latin America, maybe it's capital outflows. We want to be orderly. If we get an orderly process because the U.S. is increasing rates and capital will move a little bit there, I will be very satisfied.